right, so we have an exciting subject today to talk about, and I'm going to let you introduce it because this is something that's beyond like
Yeah, like I
it's
kind
a
of
foreign
know
language.
10-year yields, but
Yes.
like what even is it for?
Yeah. What does it do?
Exactly, good question. And that's what indicates where the interest rate's gonna go up or down, the 10-year yield. So let's see what it even means, right?
Yeah,
So the
frozen.
10-year Treasury yield
Okay,
is
stand by for just a second. You froze again.
what about now?
Hey, Tatiana, you're freezing.
Can you
Yeah,
hear
you're
me?
good now. Okay, so we had difficult.
We're
This is
having
our-
all kinds of difficulties today.
Yes, this is our fourth attempt just to shoot this video. So we had technical difficulties in our Zoom with Tatiana. So she is recording that. She's going to send it over to us. So as soon as we end this video, we're going to get that on here and get
And I'm
you.
probably never going to see it, and so I'm never going to know about a 10-year yield.
You're going to have to watch it. You'll be number 2. Yes.
I'm going to like us.
That's
I'm
right.
gonna
Oh, you
thumbs up
should.
us.
Yes, and subscribe.
What? How do you even do that?
I don't know.
Is there a button?
Yeah. Okay, so.
I'm on my social media fast.
Oh man, you're never.
For it, I'm about to end my 3rd week, and it's been glorious.
Yep, you're never going to see it.
Probably not.
Yeah. Okay. All right, here we go. Here's the presentation.
So I'm sure people hear about 10-year Treasury yield and that it correlates with the interest rate and it's indicator of whether the rate gonna go up or down. So what does the 10-year Treasury yield even means? Let's just talk about that. So the 10-year Treasury yield is what US government pays investors to purchase the specific security with a maturity of 10 years upon initial assurance and issuance, and is generally considered risk-free. Essentially, the 10-year Treasury yield is the current rate investors would pay if they bought them today, and can be viewed as an indicator of economic growth. Historically, the 10-year Treasury yield has been considered a key benchmark for the mortgage rates. However, mortgage rates are not actually based on US Treasury note or Treasury yield as commonly believed. So the yield is considered a marker for investor confidence in the markets, shining a light on whether investors feel that can make a higher return than the yield offers on a 10-year note by investing, let's say, in stocks or some other riskier securities. So basically, the 10-year Treasury rate or yield refers to return expected on 10-year Treasury note sold today. So the mortgage rates, they're tied, so to say, to bonds, and bonds are safer than stocks, right? So when the prices for 10-year bond drops, and they drop when the confidence is high and investors feel that they can make higher return in investments elsewhere, like on stocks or ETFs. So they buy stocks, and because of that, the 10-year bond drops and 10-year Treasury yield rises. And in contrary, when the confidence is low and investors start buying bonds, the bond prices go up and yields fall as there's more demand for these safe investments. So when bonds prices rise and yields fall, the mortgage rate follow and they fall as well. So here the fixed mortgage rates and treasury yield generally move together, right? So why? As a fixed rate asset, mortgage-backed securities are direct competition with treasury investments for investors' money. So for mortgages to stay competitive in the eyes of investors, the rates on the mortgages inherently follow changes in the yield at treasury year. So right here we can see this is the 30-year rate, and the dark blue and light blue is treasury yield. So you can see that they actually move parallel to each other. And another fun chart here shows in red we have prime rates, and in green we have 30-year mortgages, and in yellow we have the 10-year treasury yield. So you can see yellow and green, it moves all together. The prime, there it's a little bit up and down, but in generally you can see that they all move, they have about the same trajectory, they all move together. If you have more questions, I'll be happy to explain more. You can Google or give me a call, 571-245-3000.